All right, hello listeners, welcome back to another episode of Cognitive Dissidence. As usual, I'm your host, I'm Jacob Shapiro. I'm a partner and the director of geopolitical analysis at Cognitive Investments. Rob and I are back at it for our weekly chat on geopolitics and markets, and we are both a little worse for the wear. I barely slept last night. I was up with my adorably cute daughter, Annie Love, but I was up with her and didn't sleep very much. And then Rob has been dealing with the flu for the past couple of days, and he was honestly heroic to even appear on the podcast, let alone be as insightful and erudite as he was. As my wife would tell you, I'm much weaker than that. If I had the flu, you probably wouldn't see me for a week and a half, and I'd be giving you apologies that you didn't have any podcast content for that time. So I think we did a pretty good podcast besides. I will say I was a little discombobulated. I forgot to hit the button on my nice microphone. So even though this intro will sound nice, you're picking up my AirPods for my half of the conversation on this side. So apologies for that. I'm sure our producer will do the best he can to smooth it out. But we'll be back to the harmonious bass sounds of this nice microphone next week. And sorry for the drop in quality there. So otherwise, my email address is jacob@cognitive.investments. Email me if you want to talk about the podcast or about what we do at Cognitive Investments. And if you haven't left a review or a rating on the podcast, please do. It's tremendously helpful. It takes 10 seconds of your time, but really helps the algorithm and helps get this podcast in front of, well, not in front of more eyes, I should say, into more ears is the correct metaphor I am looking for. Okay, I'm going to go take a nap. Cheers. Enjoy the podcast. See you out there. Cognitive Investments LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Cognitive and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.cognitive.investments. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor.
Rob, I feel like it feels like months since I was in my office and you were in your office and we did a podcast, because it hasn't been months. I don't know, because I've been on the road. You last week we couldn't get our schedules right, and you've been felled by sickness this week. So it's nice to see your face, even if the listeners can't.
Well, it's been quite a journey to get here. That's for sure.
Why don't we start? You said you wrote some notes just about, the Fed meeting this week and some things that you think the market is taking into account. So why don't you just start us off and then we'll roll from there.
Yeah, so it's always nice to do a little top level gauge taking every once in a while. And we've talked about this idea in the past about how economic cycles or business cycles across the world used to be much more synchronized. So we like to show this chart, interest rate cycles in China and Europe and the US, which are the three major economic regions of the world. And they all basically used to move together. And now they're all over the place like a plate of spaghetti. And that's really the theme of what's going on still today. And I think that's the underlying theme of how to interpret this Fed meeting that just took place yesterday, which is that things are a mess. So you have, to put it technically, you have China that's rebounding with a vengeance, with pent-up demand. Consumers want to get out, they want to travel, and the early indications on that have been really quite positive. As you pointed out, the COVID worst case scenario does not appear to have materialized, and that growth is really starting to rip.
It is, although not to interrupt you, but I feel like so they might have gotten through the COVID issue, so now they just have the property bubble and the U.S.-China trade war to deal with. It's like out of the frying pan into the fire with them. You can already feel that narrative shifting, because even though PMI is up and Chinese consumers are consuming more than they did since I think it's back to 2019 levels or close to it, and yet you're not getting the liftoff that I think people were expecting with the reopening, and people are talking about property now. They're talking about the trade war and stuff like that. So you can sort of feel the market narrative, at least on China, shifting, because it's not going the way that the consensus thought.
And their long-term problems have not gone away, that's for sure. And you can see it in their equity markets, because Chinese equities absolutely ripped coming out of the winter and when rumors of reopening were starting to trickle out. But in the last couple of weeks, they've mostly gone sideways, coming out of the New Year holiday. So you have China, nevertheless, the fastest growing of the group. You have Europe that was, expected to really slow down and perhaps go into a big recession, sort of defying those expectations. And then on the other hand, you have the US, which had been on fire, and the whole narrative is about how much is the US going to slow. And you can see these sort of, I like to use the metaphor of a boat and water. So if before the waves were all synchronous, think of big waves all moving together. And now the boat is being, buffeted by many, many little choppy waves back and forth. And if you look at the US case in particular, there's already growing evidence that we see that the US is actually starting to reaccelerate itself. So, I think this is where the opportunity is to make money in the next 10 years, frankly, because the idea that things are going to trend like they did is probably not the case because of this asynchronicity. So you really need to look for cases where people are assuming trends, and maybe the trend is not going to trend. Maybe it's chop. And I think this is one of those cases because everyone is convinced that interest rates are going to come down in the second half of 2023. Bond markets are really ripping after this Fed meeting. So bond yields are coming down. The yield curve is assuming that the Fed is going to be cutting rates because the US is going to be slowing down and perhaps going into a mini recession. How bad is that going to be? That's basically what people are arguing about. But when you look at, the other sources of chop out in the bathtub, they're all starting to turn much more positive. And the data within the US is just starting to turn a little bit more positive as well. If you look at things like wage inflation, like some of the early January data is starting to reaccelerate a little bit on wage inflation. And you have American Express coming out and blowing the numbers out on their Q4 earnings and saying, the high-end US consumer is absolutely spending the lights out. Those are not the sort of data points that you see when you're really kind of going off the cliff entering a downturn. And the other thing, just to point out is, we've spoken a lot in the past about how one of the key principles that we try to use is looking at different asset markets and how they seem to be interpreting things differently. So you can look at stocks, you can look at bonds, you could look at currencies or commodities, or those four. And they're telling different stories right now. So the bond market is doing well, as if we're going into a recession. As I said, yields are coming down. And yet, if you look at what's ripping in the stock market, it's cyclical companies, it's Nucor Steel, it's home builders in the US. These are things that do well when you're in the early part of the cycle, not when you're in the tail end, we're about to head into a recession part of the cycle. And that's a really interesting divergence that is a bit of a puzzle if you really think that things are going to linearly just, get weaker and weaker and weaker. And it's just, when does Jay throw in the towel?
Yeah. Well, and I guess tech stocks joined the rally today. It's Thursday in force. What Facebook was up over 20% at one point this morning. And
on the tech stock thing, just to tie this into that, look at what the semiconductor stocks have been doing. Their results have been awful. And the semiconductor cycle has been absolutely in the tank, with a few exceptions like autos, which have their own weird thing going on because of the bottlenecks from the last 2 years. But the stocks are going up. That's really notable. All of these really cyclical areas within tech. So consumer, this was a data point that really blew my mind. In Q4 of this year, global smartphone shipments were down 18% year over year, which is a huge drop. And you can see that rolling through the whole semiconductor industry. And yet the stocks are not going down, they're going up. So Mr. Market is looking at something and saying, I sniff out an acceleration in growth, almost as if this is early cycle and not late cycle.
Totally random aside on your metaphor of the boat in choppy water. Do you know what one of my least favorite books of all time is? The Old Man and the Sea. I think it's literally one of the worst books of all time. And I love Hemingway. Like, I'm a big fan. One year for April Fools, I'll write the entire sit rep and just Hemingway prose, and that'll be kind of fun. But I cannot stand The Old Man and the Sea. It's about, my fishing rod was in my left hand, and I put it in my right hand, then I taped up my left hand, then I put it back in the other hand, and I smelled the sea. It's like 150 pages of this nonsense. Anyway, sour grapes, but most of the time it's good, but I don't know why we're all reading Old Man and the Sea in school when we could have read other things. Although maybe we're going to ban all these books anyway in the United States. But let's not. I won't go down that rabbit hole. Just to develop a little bit further what you're saying. I mean, you talked about the U.S. and Europe and China. I think it's worth throwing in that they're not the only ones with their boats facing different levels of water. So Brazil said that they were going to hold interest rates steady, but also that they thought that their inflation expectations, maybe they were going to have to raise some more. So you had a suddenly hawkish Brazilian central bank when people were expecting the opposite. The UK raised rates this week, but said this was probably the last one. The ECB raised 50 bips and said they're going to raise another 50 bips in March, and then said that's going to be it. Your boy Jay, I don't know, I guess he's just going to keep raising and raising and raising until it looks bad. And Japan is still like looking at the Financial Times and being like, we got you. You thought that we were going to do what you think we should do, and we didn't do it. So just kind of literally throughout the stack, even sort of countries that are not the big three are really all behaving in their own unique ways. And I guess from a geopolitical perspective too, but certainly from a monetary policy perspective.
Yeah. And part of the problem or part of the risk with that is it increases the probability of policy error because there's always a lag. Like, look at now, everyone is completely focused on disinflation, in the US, for example. And it takes time for data to flow through, for things to change. Most policymakers are not particularly forward-looking. And this isn't, to pick on the US, every policymaker is in the same boat. It's difficult to get buy-in for decisions until it's staring you in the face in the data. But in this environment, that's really hard because the chop can send you in one direction and then the other direction in a relatively short amount of time from a business cycle perspective.
Worth talking about us closing the short on the euro, or do you want to move on to the Philippines?
Let's move on to the Philippines. I think that was more of a technical close than anything else. I still think that we're holding to that thesis.
Well, then let's move on to the Philippines. A couple weeks ago, bunch of you were freaking out at me on social media about China and the Philippines signing a bunch of MOUs and agreements about Chinese investment in the Philippines. This shows that Marcos is going to move the Philippines closer to China and things like that. Well, boy, did that not happen this week. So you've got Marcos is going to Japan apparently next week. And while he's there, he's going to talk about expanding not just economic cooperation, but according to the readouts, defense and security cooperation as well. And then the bigger news is that the Philippines and the United States are going to accelerate the full implementation of the Enhanced Defense Cooperation Agreement with apparently 4 new agreed on locations for what sounds to me like new U.S. military bases, in addition to 5 that are already there. I don't know that they would call them military bases. There might be a political thing behind the jargon, but I mean, if it walks like a military base and it talks like a military base, it sounds like a military base to me. So I think that's pretty big news when you're thinking about the South China Sea in general, because I've always said that I think the Philippines is the real center of gravity of the South China Sea for the next couple of years. It's not Taiwan. China can't do anything with Taiwan yet. It's building its capability so that it can, but it's not quite there yet. But another Scarborough Shoal type incident, or using China's economic influence to try and make the Philippines, they don't even have to flip the Philippines to China. They just have to make the Philippines neutral. They just have to take one chunk out of that U.S. Security envelope in the South China Sea and in East China Sea and the Indo-Pacific in general to try and make things a little bit better from a Chinese strategic decision-making perspective. And they just haven't been able to do that. So there's that specific thing. And then there's also just a bevy of, things that the United States is doing in concert with its allies to make life harder for China. And the allies are playing ball. The Netherlands is playing ball. Japan is playing ball. India even looks like it's playing ball. It's not just the Philippines. So it's early yet. We're only 1 month into the year, but I'm feeling better and better about, the forecast that we put out in December that said, hey, even though it's a multipolar world, like the United States is going to show like all of that leftover strength that it still has. It hasn't deteriorated into nothingness because, and I'll close it here. I know I'm rambling a little bit, but just always remember, like, China's only defense treaty ally in the entire world is North Korea. And if you're in a knife fight at a bar and North Korea is the buddy that you're expecting to come rescue you while everybody else in the bar is ganging up on you, you're going to get your ass kicked. And that scenario is like kind of opening up for China right now. They can't buy a break.
Are you doubting Kim Jong-un's knife skills? Come on. He seems like a pretty hardy guy.
Yes. You think he has, yes. You think he has fast reflexes? I don't think decades of chain smoking and overeating are very good for the reflexes. I don't know. He was a big basketball player. I think Marco somehow knew somebody who knew him. So maybe when he's on next week, I'll ask him if he can tell me anything about Kim's knife skill.
And in the case of the Philippines and countries like that, if they are engaging more with the U.S.'s, intentions to rally the troops, what does that mean for them economically? Do they get any benefits out of that? Like, what do they get in return? Investment? Something else? Just security guarantees? Like, what's in it for them other than towing the line for Big Brother?
I mean, that's an interesting question, and it probably varies country by country. Generally speaking, countries that have been in the U.S. security orbit have done well. So the top two examples of this are Germany and Japan. Now, the United States, took out the checkbook for Germany and Japan to rebuild them. This isn't to say that the United States is going to do that for a place like the Philippines. And the Philippines has so many domestic issues that make it less than attractive for most U.S. companies. Like, a U.S. company is looking at the Philippines, and you see a good population, you see good demographics, but that's about it. And there's so many other options, Mexico, even places like Vietnam, although they're having their own problems, that you would probably want to go to from a supply chain perspective in the Philippines. But so there is something to be said for just being in that club has some of its own benefits. I think in the case of the Philippines, though, it also has to do with a culture of national pride and not wanting the Chinese to be able to take some of these islands and shoals around the Philippines, because that's a security threat to the Philippines. And if the Philippines wants to have sovereignty and independence, the U.S. is the stronger power that is far away that it can work with, and China is the closer power that might actually want to occupy or do bad things to the Philippines. So I think there's also just a straight up defense security, we're expecting U.S. help if something actually happens. Which, again, not to beat a dead horse, that's why the Philippines is the place that I watch so closely, because I can't remember if Scarborough Shoal was 2012 or 2014, but the Chinese basically, occupied parts of Scarborough Shoal, and the Philippines looked at the United States and said, hey, we have our defense treaty relationship. You've got these bases, like, you're going to help, right? And the Obama administration was like, no, we're not going to help you. Sorry, we'll submit a really angry thing to international arbitration that says that this is really yours, but we're not going to actually, put the ships where we need to put them. Maybe that changes in 2023. Maybe it's a different world. Maybe it's more competitive. I don't know. But all of that is to say that if you're one of these countries and you're really close to China, there's that security element. It's less clear. And, that makes sense from Japan's perspective too. And Japan has a long-standing relationship. I'm pretty surprised the Dutch, and this is reported, I don't think they've even actually publicly confirmed it. If they haven't, I missed it, I apologize. I was really surprised the Dutch are going along with these semiconductor restrictions. I would have thought they would have been a little more jealous of their own independence, but like, EU is also getting more suspicious of China in general. So maybe the Dutch just didn't want to fool with it. I'm sure ASML is not happy. There's also a conversation to be had there about these huge multinational corporations and how they're really more similar to each other than they are to the governments that they actually represent. So ASML might actually in a weird way have more in common with a Huawei than it does like with its own government. But that's another rabbit hole to go down.
I was just going to say, speaking of the semiconductor side of things in China, there was a piece that came across the knowledge platform that I think Tom put up about China confirming the existence of its first real working quantum computer. Did you see that?
I did, and I also saw one from Steve on the knowledge platform that threw a little bit of cold water on the extent to which those restrictions that on the EUV lithography equipment that China needs to make the cutting edge chips, that there are actually more loopholes there than I might have thought. So I guess that's our weekly plug to tell the listeners that you should be reading the knowledge platform. But what about the quantum computer stuck out at you?
I just think it's interesting because if the US is trying to, and I understand the ASML example is such a specific example because it's one company in one place that does something that's near impossible. But putting that aside, like, technology wants to flow. And I think history is not on the US's side in terms of being able to restrict access to other advanced countries. And I would classify China on average is not a rich country, but parts of China are extremely advanced and very capable technologically. That there's just not a good track record of having that be successful over any long time period because stuff just gets out. Like you hear these stories about, the US, this is, New England pride here, but US mill owners sending spies over to Britain and getting the latest designs for the looms and bringing them back in these secretive ways. Like that's how it works. And it's really hard to police. And yes, the ASML thing, as I said, is very unique, but still, I wouldn't bet on the long term that the US could totally keep China in the dark on a lot of these things.
Well, and another really interesting thing that happened this week was that China's Ministry of Commerce and Ministry of Science and Technology leaked that they were thinking about putting some serious export restrictions on advanced solar wafers, which China has something like a 90 or 95% market share in globally. So, I think China's trying to be a little more conciliatory from a trade perspective, but the United States is really not meeting it halfway. And while there are really limited ways that China can push back, I thought it was really interesting that they're thinking about solar as one place where they do have a lead, just because we don't have to get into why they have the lead, but they're in the lead there when it's making solar wafers. And I think we're used to geopolitics with oil and natural gas and coal and these other things. But one of our points here has also been multipolarity is not just a geopolitical thing, it's an energy thing. So whoever has the commanding heights of hydrogen or nuclear or solar or wind, like that's also going to be a source of geopolitical competition. And they're at least thinking about flexing that muscle too, which I'll get on my hobby horse here for just 1 minute. I've been getting so many questions about Peter Zeihan in the past couple of weeks. And I actually, I had a client who asked me to write a rebuttal of his appearance on the Joe Rogan Experience. So if you want to read that, email me and we can get it to you. But one of the things he said about China that I just thought was silly that pertains to this conversation was he said that China hadn't advanced technologically in the last 10 or 15 years. And it's sort of offhand comments like that like there's actually a lot of value, I think, in the stuff that Peter's doing. But when you get an analyst that's saying things like that, like you're not paying attention because China has advanced remarkably in the last 10 or 15 years. It's absolutely extraordinary what they've been able to do. They haven't been able to do everything they want to do. They've gotten all the way there. We would actually probably be talking about them taking over the world. But there are areas where they are a global leader. And if you prosecute this trade war to its furthest conclusion, it's going to hurt Chinese consumers more than Western consumers, but we're going to feel it. We're going to feel it in all sorts of ways. I think inflation is one of the things, I think that's one of the reasons inflation is going to be stickier than people think.
And the solar example is a really good one because I read a really good analysis recently by a guy named Gregor McDonald, who I'm sure many of our listeners will be familiar with. And he has a sort of an ebook that he put out, which I would recommend, called Oil Fall. And one of the theses that he makes in there, which I thought was well put, was, we're always thinking about renewables as sort of, a carbon-oriented investment. It's about, environmentalism, moving away from, carbon-emitting sources, et cetera, et cetera. But he points out that we're reaching the point now where building a huge capacity, and solar is all about cost. And solar has become the low-cost energy source in many ways. And that what China has done by building out, I mean, we've spoken recently about just the sheer mind-boggling growth that they have seen and are continuing to see in their solar module capacity. That by doing that, they're actually getting a strategic cost of energy advantage in many ways. And that's something that I don't think gets remarked on nearly enough. And it is an example of them using high technology to reduce their dependence.
In some ways, one of the most surprising things about this week to me was just where India's at with the United States. I'm actually thinking of writing the In Focus on this for the sit rep this week, because my take on India has always been that they don't want to be part of the U.S.-led security alliance. They want to guard their own. They've been the non-aligned power literally since independence. But when you start poking around a little bit and you hear that India and the United States are meeting on their critical and emerging technology summit, and they're talking about ways to deepen connectivity across their ecosystem. They're talking about biotech and advanced materials and rare earth processing and semiconductor supply chains. I wonder if we're inching towards a sort of, Britain in the 19th century scenario, which is, the British Empire probably would have become the global power that it became after the Napoleonic Wars if it hadn't conquered India and been able to use India as a steroid boost to keep the empire going for another 100 years or so. I wonder if the United States is making some headway in attracting India from that perspective, because if they can get India on their side in any meaningful way, it's a blow against the multipolar thesis, and it's a big feather in the cap for the United States there. So I don't think we're there yet. Like, there's a lot of stuff going on with India, but it does seem to me like India is a little more open to flirting with the U.S. than I thought they would.
What do you think accounts for that as far as their incentives?
I'm not really sure. No, it's not that I'm not sure. I mean, India wants a lot of foreign investment and foreign technology. They want to do exactly what Japan and China already did. But they want to do it in such a way that benefits them. And I just don't know if you can have your cake and eat it there too. I thought, the Modi government unveiled a budget for this year, which was interesting on a lot of different levels. But I thought the most interesting aspect of it was the defense spending was a smaller than expected increase. It's still something like 5.5%, I think. So it was still, and it's like 53 billion of total defense spending. So that's like a big number. But to put that in perspective, that's about a quarter of China's. It's so small, I don't even know what the percentage is of the United States is. But they hiked spending on infrastructure a whopping 33%. So they're going to throw over 100 billion in this budget at just trying to build better infrastructure. So in some ways, I think that's an indirect way of answering your question. They want infrastructure, they want technology, they want investment, they want U.S. companies to come to India and build their factories there and do all the tech transfer and things that China got to do sort of previously in the era of globalization. That I guess is my best bet. But the flip side is if you get too far caught into the U.S. sphere of influence or the U.S. orbit, like, where's your independence and where's your sovereignty? Now, it's a completely different scenario. Like in the 1800s, a couple hundred British people could show up with guns and subdue the entire subcontinent. Like, that's not going to work anymore for the United States. But even a version of that, of a friendlier India, would be a big deal and would be a blow, I think, to what I'm thinking about with a multipolar world, because that's one of the big poles that would have to stand alone if that thesis is right.
Well, do you think that India's greater receptiveness to this is a sign of their self-confidence? Like, they're less worried about being dominated and pushed around by the U.S.?
I don't know. It's a good question. Maybe I know Indian listeners are very opinionated, so maybe they'll tell me. The Modi government doesn't strike me as a government that lacks confidence. Modi's approval ratings are still sky high, and he's doing all of this stuff even ahead of elections. So I don't know where India's confidence level is at. If I was the Indian government, I would feel somewhat confident. But when you actually look at the scope and the scale of the problems that they face from just basic infrastructure perspective, it's crazy. I mean, when Modi first came into power, I remember he said one of his big goals was to make sure that like a majority, or not a majority, that almost everyone in India had, modern indoor plumbing by the end of his leadership. And I sort of laughed at the time and then thought to myself, wow, so like that's the level that we're on here, where India's at in the growth cycle. So if they've gone from we need indoor plumbing to we want to be the next semiconductor depot for the United States, like they're doing pretty good.
Talk about catch-up growth.
Maybe this is a good stopping point on that sort of broader conversation and checking in on the situation in Peru.
This is an interesting one because it's hard for me to really get a sense for how seriously people are taking the disruptions in Peru. Like people are reporting on it, but I mean, other than the news breaking this morning that Las Bambas was, going to be fully shut down, which I think was sort of understood before it was officially announced. It seems like there's some complacency about what that could mean, but what is your sense of the consensus around that?
I don't think people think that much about Peru. I think this is one of these areas where there's not enough people out there for there even to be a consensus. I like I'm a little confused, and we're long copper here in various ways here at CI listeners. That's not investment advice, but that's what we are. Come talk to us if you want to talk about that a little bit more. But I don't quite understand where copper is at right now versus the developments that we're seeing on the ground in Peru. So to just kind of recap what's going on this week, at the end of last week, Peru's military and security forces and police said they were going to break up all the roadblocks and they were going to try and sort of return normal transportation to Peru. They haven't been able to do it. As far as I can tell, the roadblocks are all still up, and mines like Las Bambas either shutting down or going to care and maintenance. I'm not sure how far they're going, but these copper mines are not producing. And even if they are producing, they're not able to get their copper from point A to point B, and there's a whole supply chain that's broken. I put an article in the Knowledge Platform that said, there are millions of Peruvians who could lose access to safe drinking water because they can't get the chlorine and the other chemicals they need to the water filtration plants to make sure that the water is safe to drink. They have like 2 weeks left or something of supply, and if they can't get the streets open, things are going to be bad. You've got Peru's Congress, which continues to sit on its hands. So for a third time, they decided this week not to bring forward the next election cycle. Which is sort of the main, I would say that's probably the main thing the protesters want. They want to go back to elections. They want to sort of redo the election from, I guess it was 2022. But that also raises the whole issue. But so Peru's Congress is not really even taking this that seriously either. So I don't know. I don't know how to account for the fact that, the second largest copper exporter in the world, all of its biggest copper mines look like they're shutting down. You can't get anywhere from point A to point B. Foreigners are not in the country right now. You can't even get to Machu Picchu. And yet, copper's flat while Facebook is up 20%. People are still drinking Starbucks, which I can't believe. After another week on the road last week, the fact that anyone drinks that swill, I don't understand. But anyway, I don't quite understand why we're not seeing a little bit more of a reaction in copper versus what's going on in Peru, because the situation looks really bad.
Better watch yourself with that Starbucks talk, because a listener of the podcast cornered me the other week and said that she strongly disagreed with your assessment. So getting some serious pushback on your Starbucks crappy coffee thesis, just to let you know.
That, my friend, is a hill that I am willing to die on. It's gross. Like like if somebody wants to come to me and tell me they like the fruit drinks or whatever, like, okay, I'll engage with that. But if somebody is telling you, or somebody is telling you that I'm wrong about the quality of Starbucks' coffee, they're objectively wrong. Would be happy to discuss this with them further.
Cheery day. Yeah, but copper's a weird one because, it had such a huge jump in the first week of the year. So we're really dealing with some technical overhang as it digests this. Normally you would see a pretty significant pullback as that jump gets sold by the people who made the quick money. We haven't really seen that. We're starting to see it today, but I wouldn't read too much into what it's doing on a day-to-day basis right now. The broader trend is definitely up. But how it's pricing in these potential tail risks of major disruptions is a tricky one. I mean, if it's not on the front page of the Wall Street Journal, I think it's safe to say that it's not something that is dominating people's thoughts, and it should be, because this is a huge issue.
Yeah, it may not be the front page. I will say it's gotten to like, I don't know the exact, it's like on page 7. If you go looking, like you can now, like 2 weeks ago, you had to be Google translating stuff and like on weird Peruvian websites with a bunch of pop-ups that probably gave my computer a bunch of viruses I'll never get rid of. But like you can find it now in English press and mining.com, and people are starting to talk a little bit about kind of the implications of it. I also think there's something about the China reopening trade here too as well. We hadn't planned to talk about this, but you asked me some thoughts about oil earlier on our team Slack, and I guess I kind of pair them in the same way, because at least I think the reason people have been bullish about copper is because they're thinking about China reopening, and they're thinking about less pressure on Chinese property developers, and they think that China's going to be consuming a lot more copper, and oil sort of goes along with that. And oil's another one that's just sort of hanging out there.
Well, oil is a whole
nother barrel of oil. What's going on with oil?
And oil is hanging in there. It's basically gone sideways for a few months, like kind of a big rounded bottom. So to put this into perspective, the day before the war broke out, West Texas crude was trading in the high 80s, and now it's 76. So you had a huge spike, and then it's sort of, it's been coming off the boil, but it's not plummeting. Whereas copper, is sort of on fire, and it's having a little pullback within, literally on fire, I guess. Having a little pullback within this big rally. So, I don't know, two very different markets. I think it's tricky to pull out the supply and demand factors. But it is weird that copper would be the thing that people latch onto with Chinese reopening, and yet oil does not seem to be responding, which is a bit of a puzzle.
Well, yeah, it makes me worried about the China reopening play, and it makes me wonder how much of the copper play is a China, like, if that's in there. If you take out the China reopening people, like, is that somehow gonna kill the overall momentum? I wouldn't think so, because you need copper for literally everything, all these renewables and decarbonization and electrification. Like, we're getting to the point where we need copper more for that stuff than we need even for traditional stuff. I will say I was looking at I don't even know why I read the OPEC reports anymore, because you read their monthly bulletin and you go to supply and demand for oil, and that supply is like 101 or demand is 101.8 and supply is 101.7, things like that, and they've got it like all tailored exactly, and it's like just a reminder that the whole thing is rigged. They're just gonna like cut and move things around based on where they want those numbers to kind of be, and they have no idea what China's going to be importing. I also saw, when you read that report, it's almost like they didn't want to say they were cutting oil, but they set quotas for Nigeria and Angola that they know Nigeria and Angola can't meet. So like it's sort of a de facto cut without coming out and saying, hey, we've decided to cut like X number of barrels because we want to support the price. But that's also happening sort of behind the scenes too. So I guess another reason why not to talk about oil versus copper is there's no copper cartel, as far as I know, that is out there pulling the string.
The other difference between them, which I think is really important, and we talked about this a few weeks ago when we first mentioned, I think in late December, about copper being interesting, is I don't think that copper is just sort of a dummy Chinese reopening trade. And the reason is copper bottomed back in June, which was back when there was not even an inkling of reopening on the horizon. That was really October when that trade started to play out. And copper bottomed in June when all the other base metals were still bleeding out. And it was the first one to dig in and lead us out. And maybe that was something unrelated, but it seems like it's being driven by something more than just the Chinese reopening trade. And that, I think, is an important distinction.
What else? Is there anything else in the world that we said we were going to hit, Rob? it's funny. There were all sorts of stories at the beginning of the week that I thought were going to be important that didn't really turn out to be important. There was, this attack on an Iranian city, Isfahan, by drones that U.S. papers said was the Mossad. I was sort of gearing up for, oh my God, are Israel and Iran going to come to blows in some kind of way? That really hasn't gone anywhere. There was the nothing burger of the 4-star U.S. Air Force general saying he expects war with China in the next 2 years. Whatever, I expect a unicorn to be delivered to my house in the next 2 years as well. All these kind of things that that might have been important, but the more important stuff of the week is sort of, these boring reports out of the White House that they're going to stop issuing U.S. Licenses to export technology to Huawei, or they're having another India-U.S. Tech meeting to do things together. We're going to build more bases and have more acronyms with the Philippines. All that stuff. Oh, there was also the one where Jake Sullivan told the FT that apparently the United States is finally going to get rid of all the regulatory barriers that were preventing the U.S., UK, Australia security pact from really being realized. Just kind of all these boring pushpin bureaucratic things are all happening, even as the headlines focus on the crazy stuff.
I guess that is one other thing to point out along the same lines of sort of U.S. allies, beneficiaries doing well, is we've talked about Mexico and the Mexican peso, right? So in dollar terms, the Mexico index or the Mexico ETF is back to its all-time highs, which previously were a decade ago. So Mexican stocks are going absolutely bananas. That's worth noting. And I don't see too many people talking about it.
How does that make you feel from an opportunity perspective? Did we miss a boat there?
No, not at all. I mean, if you look at the relative performance versus the S&P, they were in a decade-long drought prior to that. So on a relative basis, they're still in the tank. Basically, they peaked in 2013-14 and then just bled out for a decade. And now they've ripped back to that prior peak in a pretty short amount of time. So I would take that as the sign of something big that's starting, not something big that's ending.
That's interesting because I think maybe we can be the first to, breaking news, guys, there's going to be Mexican general elections in 2024. You heard it here first, but I don't think anyone's paying attention to it quite yet. But some of the first polls on who's going to replace AMLO as Morena's candidate came out this week. And Claudia Sheinbaum was the front runner right now. Now we're more than a year away from Mexican general elections. A lot can change. But I thought that was really interesting because she, sort of shades of Angela Merkel, has a degree in physics, has a PhD in energy engineering, a mayor of Mexico City, think in terms of technocratic and pragmatic and things like that, but yet part of Morena and part of the sort of coterie that is thinking more leftist, populist, nationalist and stuff like that. Maybe I'm giving her a little too much credit. I'm just getting to know the potential candidates for the next Mexican president in 2024. But my first read of her bio, I was like, well, if that's the Morena president, that sounds a lot better than AMLO, who can't seem to get on the same page as Biden or Kamala Harris, even though they say nice things to each other when she comes to visit. So maybe that'll have something to do with it. I think there's a lot of, the main problem that's holding U.S.-Mexico relations back it's the AMLO thing, and then there's also the cartel thing. But you're never going to fix the latter. But if you could at least get some progress on the former, and you think things are going to get better on the former, maybe that's something that folks are beginning to understand, that we're towards the end of AMLO.
We just have to convince the cartels to get into the business of assembling washing machines and dishwashers for Samsung. Then everyone can do great.
I would think that Sinaloa would be cool with that. The CJ&G guys seem a little scarier, but I almost don't even want to say anything about them because God forbid one listens to me and I say something wrong. But yeah, the cartels are split, they're called drug cartels, but they really just make money. So I think it's really more about can the Mexican state integrate these cartels into normal or legal society without completely breaking the entire system? they've done it in the past. Like they did this in the late 1800s, but then there were revolutions and all sorts of other things that came with it. And AMLO came to power promising reconciliation, realized very quickly that wasn't going to work, and now has basically militarized Mexico's police, which doesn't seem like that doesn't sound like the situation's getting better. So I don't know. That's a tough job, convincing the cartels to make washing machines. There's not a lot of glory in there.
Yeah, but as you point out, Mexico is sort of a middle income country, and they've managed to do that without ever really solving this problem. So maybe there's some kind of equilibrium that they can find. I don't know.
Yeah, I mean, one of my takes that I'm most out on an island about geopolitically is that for the last 6 to 8 months, I've been optimistic about the cartel wars. I've been saying, murders are still at really high rates historically, but they've peaked. They're not increasing anymore. And we're getting smaller numbers of cartels controlling more territory, which should mean less violence because you don't have all these smaller groups that are trying to have turf wars and stitch each other's faces onto soccer balls. So, but I don't know. I mean, I haven't read that anywhere. I just look at the murder data and I'm like, is this good? And then you read everything else and everybody's like, no, it's terrible. It's worse than ever. So I don't know how to square that either.
Here's kind of a stupid question, but I'm going to ask it anyway. Does the growth in migration and sort of people smuggling, as I don't want to call it a growth market, but sort of a dynamic business opportunity, do you think that's contributing to the volatility between cartels as they duke it out to seize that?
You heard it here first, guys. Rob is bullish on human trafficking. He'll start trying to figure out how to express that.
It's a dynamic growth industry.
I don't know. I mean, the cartels do, my understanding is the cartels do make money on moving people from place to place. I have trouble imagining, I guess, is your question is that a source of competition between them?
Well, what I mean is, when we talk about the cartels, often we talk about there's periods of stability where everyone kind of knows their place and they don't kill each other as much. And then there's periods where things are up for grabs, whether because some cartel is falling apart and everyone's fighting over, territory or people or business, or there's some, new area to make money in that they're fighting over to seize. So that's really my question is, there's clearly something has changed in the environment in the last, 6-7 years, given the rise of people smuggling and also people smuggling from very different places than they were coming before. People are coming through the border from places like Haiti and Cuba. And I just wonder, is that shaking things up where that's a cause of violence and fighting over that business, quote unquote?
I don't have an answer to your question, but I will say that what it put me in mind of is that what's up for grabs right now is the Mexican state, because Pan has been disgraced and PRI nobody wants, and AMLO was sort of this flash in the pan, but he's not going to have a second term. And you can already sort of tell in the, I talked about Scheinbaum, these people who are going to replace AMLO and Morena, they're not him. They don't have his charisma. I doubt they're going to get 69% approval rating. That was actually one of the most interesting things in the poll that I read. It was, 69% approval rating for AMLO, but only 48% said they plan to vote for Morena in 2024. That's still, by and large, the largest percentage. I think Pan got 12% and PRI was going to get 11%. So it's still the most, but you get a 20% drop off there between AMLO and whoever his successor might be. All of which is to say, AMLO has just given you a playbook for how to manipulate. Manipulate's the wrong word. AMLO just gave you a playbook for how to get elected as the head of Mexico with popular support and using the democracy to your own advantage. So if you were a cartel that wanted to move into more legitimate ways of business, what better thing to take over than the Mexican state itself? I mean, it's there, and you don't have those sort of single dominant institutional parties anymore that control everything. Mexico, for better and for worse, has really become more of a democracy in the last 20 years.
Well, that sounds foreboding.
Yeah, that was, and then if they're Mexican listeners, they should be furious at me for that, because they would probably say, we would never elect someone like that. What are you talking about? But I don't know. it's an out there idea, but I'm just saying, if you're somebody who wants to move from the illegal world into the legal world, and the Mexican state is up for grabs, I don't know, maybe it's more trouble than it's worth. Maybe they don't want to deal with all the corruption and the headaches and things like that. But that's generally how these things work when you get states that survive, when you have these bifurcated gray versus normal economies. You bring the criminals in, either that or you crush them. And I don't think, I mean, they've tried to crush the cartels. It's not going very well.
Well, on that cheery note,
I don't know. Yeah, this might be an episode I look back and be like, what was I talking about? In my defense, listeners, Rob is sick. He's here rubbing his eyes because he's like bravely like trying to stand in there after having the flu for 2 days. I slept all of I wasn't even 3 hours last night up with the baby last night. So apparently maybe I shouldn't do podcasts right after I'm up all night, because I started talking about cartels taking over the Mexican state. So
no, that's the best stuff. That's the best stuff for sure.
Okay. Well, I'm sure someone will call me Jason and leave a 2-star review and say I don't know what I'm talking about. That's my favorite. It's my favorite thing. All right. Well, Rob, you've been a trooper, so let's call it at 50 minutes, and hopefully we're both back on our full strength next week. Although watch everything we said this week turn out to be absolutely right. Maybe we need to deprive ourselves of sleep and health to get to the truth. I don't know.
Indeed. All right. I'm going to go to bed.
All right. Cheers.
See ya.
Thank you so much for listening to the Cognitive Dissidence podcast, brought to you by Cognitive Investments. If you are interested in learning more about cognitive investments, you can check us out online at cognitive.investments. That's cognitive.investments. You can also write to me directly if you want at jacob@cognitive.investments. Cheers, and we'll see you out there. The views expressed in this commentary are subject to change based on market and other conditions. This podcast may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur.